Just to introduce myself, I'm Victoria Moffat. I'm the Managing Director and Founder of LexRex Communications. LexRex is a specialist PR and communications consultancy for the legal sector. I'm a former lawyer. I'm not sure if I left the dark side or if I came over to the dark side, but either way, I've been doing PR now for almost a decade. That's me. So the webinar today, we are recording it, and it will be available after the event on LexRex's website and also on our YouTube channel. What else do I need to tell you? If anyone has any questions, feel free to sort of type them in. There's a Q&A box and there's the chat box. So I'll be keeping an eye on both of those during this session. Just before I let Barry introduce himself, just a really quick word on Trusted Partner, LexRex Trusted Partner. What is it? Why have we set it up? As soon as the sort of coronavirus and lockdown sort of started, we sort of recognised that, you know, as in many industries, this is going to be a tough time for law firms, and I think that's certainly come to pass. And from our perspective, you know, we just wanted to initially support our clients, but then thought, actually, why not help the profession more broadly? So we've been speaking to our clients, we've been speaking to our friends and contacts in the law to work out, you know, what the top issues are that are affecting you, that you're worrying about right now. And based on that research, we are setting up sort of webinars and possibly other pieces of content at later dates to try and help, to try and support. Anyway, moving swiftly on to Barry, I really hope you find this webinar useful. I certainly found the things that Barry was talking about during our run through yesterday really insightful and really helpful, actually. So yeah, that's us. That's LexRex. That's Trusted Partner. Over to you, Barry.
Hi, nice to see everyone. And just one small thing, Victoria. The slide I've got in front of me has got last week's header on it. So I hope the rest of them we've got the updated slides. That's my picture. I'm not as good looking as Sarah Hutton, but there you go. No, although Sarah and I have known each other for many years, and to a certain extent, one of the things we wanted to do is to pick up from where she left off last week. Just a little bit about me. Obviously, I'm Barry Wilkinson. I have worked exclusively with law firms now for 18 years. I was previously a finance director in business. Years ago, I wrote the book on cash flow for law firms. It's not a bestseller because ARC priced it at £250 a pop, which cut off the mass market a little bit. But I have managed through several recessions, and what I hope to do today is give people a little bit of comfort in what is really an awkward situation. This lockdown has got far more impact than any previous recession that we've had. So I guess the first thing we need to do is actually to say, why should cash flow matter so much to law firms at this time? And I think that's an issue, actually. Why does cash flow matter to any business? And the fact of the matter is, cash flow is far more important than profit. If businesses don't have adequate cash flow, whether because they're growing too fast or as now because of the impact of the economy. Whoops, something's just flicked up on my screen, so let me just cancel that. Sorry. If businesses don't have adequate cash flow, they die. There's an American commentator, Ed Reeser, who put it so beautifully a few years ago when he said, every substantial American law firm which has failed in recent years had plenty of profit right up to the day that it died, but they didn't have the cash to keep going. And one of the things that we were talking about yesterday, Victoria, was the emphasis in law firms on their performance management. Usually is not on cash. It's on billing, it's on chargeable hours, and it's on profit per equity partner. You can have all of those things and you can still run out of cash. So why does it matter at the moment? Well, I think even firms which are historically very conservatively and cautiously run are now having to look at the cash flow in a completely different light, because they are potentially being hit very, very badly over the next 3 or 4 months. In some cases, business is completely dried up. I was working with a firm earlier this week, which, to the best of my knowledge, has not had less than £1 million in the bank for the last 2 or 3 years. They consistently run the firm that way, and yet we're looking at projections now which will wipe that cash out and leave them borrowing heavily by this time next year. So this is a situation that some people are not used to, and really then wonder, okay, where do we go next? What do we need to do to make sure we're okay? And I would say the absolute iron rule when it comes to cash flow isn't just make sure you've got plenty of cash. The iron rule is no surprises. Should always be in a situation that even when things get tight, that you've anticipated it and you can take some kind of evasive action. And whether that evasive action is to cut spending, get more cash in from your clients, or borrow some more money. The point is, if you've got adequate warning, then you can cope with anything. Where the banks become justifiably a bit shirty is if we spring on them a surprise and say, oh, by the way, Mr. Bank Manager, salaries are due tomorrow. We're a few £1,000s short. Will you just increase the limit for us? And obviously, the banks don't look favourably on that. One thing that I would say, and linking back to Sarah's previous session on the CBILS loan scheme, last week the government actually very bizarrely said that they would not, as a part of the qualification for CBILS, require a formal cash flow forecast. They would allow the banks to make their own decision based on what they already know about their customers. But it does sort of pose a couple of questions. First of all, if you don't have a cash forecast, how on earth do you know how much you're going to want to borrow? And if you don't have a credible cash forecast, how on earth do the banks know whether they should be lending it to you? So starting point, I think, for anything in cash flow management is actually to be able to do a reasonable cash forecast. What do I mean by reasonable? Well, you know, weather forecasters can't tell us what the weather's going to be like tomorrow. So, you know, the chances in the current environment of having a completely accurate, beautifully balanced forecast which runs us through to next spring, I think is asking a bit much. You know, we're not all magicians. What we do need to do is to be able to make reasonable assumptions and see what they are going to mean for us. So one of the things that I would want to do is actually to focus the initial attention on the forecast and then use that to tease out a few lessons. And again, I think we were talking yesterday, Victoria, about the types of firm, the size of firm that it potentially impacts. Unless you're almost exclusively in private client or employment or childcare, you're going to be hit at the moment. Pretty much every firm is going to be hit. Does size matter? I've never really thought that size matters, and I was on a webinar a couple of days ago with one of the presenter was one of the leading insolvency practitioners in the professional services world, and he is quite clear that there are some of the very big firms that are having cash flow problems already. So I don't think size insulates you from the need to be able to keep on top of your cash flow and see where you're going.
There was a report, wasn't there, this week, I think, you might have seen the figures. I think it was something like 70% of the top 250 firms don't have enough cash to see them through to the end of the month. Did you see that?
I think the one I saw was a little bit longer than that. It was certainly 70%, and it wasn't very many months.
Yeah.
But yes, and there was also one which the Law Society did 2 or 3 weeks ago, which again came up with the same figure of 70% of high street firms.
Yeah, I saw that one. That was in the Times, wasn't it? I saw that yesterday.
Yeah. Wouldn't survive 6 months.
So it's the top and the bottom. Well, I don't mean the bottom. I'm not saying that high street firms are the bottom, but in terms of size, in turnover, it's the top and the bottom being squeezed, isn't it?
Yeah, it is, and yet I think maybe that's just where the publicity's come from. Because one of the things that all of this surveys have shown, and for my sins, I'm involved in the law management section's financial benchmarking survey, and consistently, what that has shown over the years is that very small firms, 1 and 2 partners, are the best at managing the cash, because I think there's probably that personal connection from, it's my cash, it's not it's my firm and it's my cash. As the firms get bigger, 5 partners, 10 partners, 15 partners, the cash management gets worse.
Why do that?
I was going to say, until you reach a point where you've got professional management and you've got formal structures in place with the 20 plus partner firms, and they are much better at managing their cash. So I think, just to pick up on the question you were asking there, I think there's an element in, as the firm gets bigger, that personal connection from the partner to the money gets weaker. It becomes a little bit more of an amorphous mass of the firms. I would like to just sort of, again, to emphasize the need for the forecasting, I would like to throw in a little bit of a note of caution at the moment for firms. I think timing is important here. Many firms have their financial year end in March and April. And so what that means is in most cases, there's a disproportionate amount of billing in the last month of the year as people catch up. That billing goes through March or April. The cash collections from those billings then come in the following few weeks through April and into May. So a lot of firms have been saying at the moment, it doesn't seem to be so bad at the moment. Should we be worried? Well, yes, that cash is coming in from work which has already been done. There's going to be a significant fall off in cash over the next 2 or 3 months. For many people, may be okay. That's a tongue twister, isn't it? But June, July, and August look as though they're going to be pretty horrible. But then the government comes to the rescue from a cash flow point of view. The government has decided that none of us are going to have to pay our quarterly VAT for the current quarter, and we can defer that until March the 31st next year. And those firms that are partnerships will not have to make the normal July tax payment, but that's going to be deferred until January of next year. So just as things start to get better, there's a right hook coming from somewhere where we're going to be hit with double taxation in the first quarter of next year. Yeah. And I have a little bit of a concern that some of the banks have been asking people to do cash forecast for the next 4 to 6 months, which is going to underestimate the impact of the lockdown periods and catch people by surprise. And if you remember a few minutes ago, I said my iron rule is no surprises. So what I would encourage anybody who's on this webinar to make sure that they are able to look ahead and see where they think they're going to be in the springtime of next year.
So even if that's not a sort of formal, so if somebody is looking to put their CBILS application in, even if it's not a requirement, even if they only have to put a forecast in for 6 months, really they want to be doing it for kind of 9 to 12 to pick up on those upcoming liabilities. Is that right? Even if it's
because there's a huge danger, and in fact, Sarah Hutton and I were chatting after her last webinar. There is a huge danger of people not asking for enough.
Right.
And then by the time they realise how much enough is, the CBILS scheme might well have closed down.
Okay. Oh, well, that's a good tip. But just picking up on a couple of the bits that a couple of questions that kind of popped into my mind as you were saying that was with regard to sort of tax and VAT. I'm hearing different things from different people. Some people are saying, you know, I'm going to keep the cash. I'm keeping it separate, obviously, and then I will just pay, you know, as and when I have to, kind of next year. And then I've got other people saying, well, actually, we're just going to pay it now, because what's the point of kind of keeping it? You know, we owe it anyway. Yes, it's cash that we could feasibly use, but you know, if that's a viable business, then presumably if it was a viable business beforehand, then presumably they are going to get their CBILS application in many cases. You know, is there any industry sort of advice on paying your tax now? You know, should you pay it now, or should you just keep it to one side and pay it when you have to?
It depends.
If you had any thoughts on that.
It depends on how comfortable you are and how much room you've got going forward. If your forecasts show that you're still going to be in good shape and have plenty of money next year, then carry on as normal and pay it.
Yeah.
In any other circumstances, if you are concerned because of the uncertainty just how big a hit it is going to be, then certainly, and the insolvency practitioner the other day was adamant you should defer everything as long as possible and make sure that you've got the resources that will enable you to see through the difficult times, and you won't get hit by a squeeze coming later on. His view was, in essence, if you don't have to pay it, don't pay it.
Don't pay it.
Yeah, but put it in a separate account somewhere so that you've got it safe and you don't fritter it.
Yeah, don't spend it. And again, another thing that occurs to me, you know, is historically some firms have a real lag, don't they, between sort of finishing the work and then either billing it, or finishing the work, billing it, and then kind of collecting it in. Is now that's a whole other webinar. Is now the time, you know, to be trying to say to teams and to team leaders and to heads of department, you know, you've got to get the money in.
Yeah, absolutely.
Get the money in.
Yeah. Turnover's vanity, profit is sanity, cash is reality.
Yeah.
And yeah, there is a whole additional webinar, and I've been preaching this stuff now for over 10 years. But there's a whole additional webinar in actually getting fee earners to understand the commercial necessity to talk to clients about money, to make sure that clients are happy with the service and with the bill and the value, and that they are going to pay, and that they haven't got any complaints. And if they have got any complaints, let's resolve them, because so often the uncollected balances are actually because there's an issue that the fee earner is afraid to confront. I talk in some of my seminars about the unfortunate choice that a fee earner has to make in those situations. Do they upset the clients by sending a bill that's more than the client was expecting, or do they upset their boss by writing off some of the time? Yeah, and sending a bill that they know the client's going to pay. And of course, a lot of people in career protection say, well, I'll send the bill. I won't worry about the client. The credit controller can sort that one, and at least my boss thinks I've been billing my time accurately.
Yeah.
So there's a whole load of issues there. But lawyers prioritize time and billing over cash collection. You remember the little Friday afternoon thing I said to you yesterday? Again, I done this so often. Victoria, play the game. What would you rather have, £2,000 or £200?
Oh, I'd rather have £2,000.
Okay, let me rephrase the question, Victoria. Think of yourself as a fee earner again, normal fee
I'm
earner.
going to have to dig back in my memory for that, Barry.
In a normal law firm, it's Friday afternoon, you've got an hour to go, you've a choice. You can spend an hour working on a file for 200 quid, or you can spend an hour on the phone ringing your clients asking for money and get £2,000. What are you most likely to do?
Well, you know what we're all most likely to do when you've got one eye on the pub at, 4:30 or whatever.
Yeah.
Most people are just going to do the
Yeah.
200 quid, aren't they? They're not going to be ringing the clients up going, pay me, pay me.
And that's the whole essence of it. How we manage and how we measure law firms doesn't focus on cash. So can we move on and have a look at just the simplified format of a cash flow forecast?
We can, but before we could do that, I've got a question in, which is, what categories of work do you anticipate that law firms will be prejudiced by COVID-19 that will affect cash flow? Which I think means, which areas do we think are going to be particularly badly hit?
Anything transactional. So residential conveyancing seems to have almost seized up. Not only for some billings actually seem to run on into April for, I think, longer than people expected, but there's still transactions going through. But the new instructions that have been coming in have been diabolical, almost universally, and that is going to produce a cash flow hole in 3 months' time, because the normal cycle from residential conveyancing is like that. Company commercial, people are reviewing contracts and terms and so on, but there are very, very few deals going through at the moment. Commercial property, somewhere between the two, that there are some deals happening, but not that much. So anything transactional is suffering really badly. Private client and employment are increasing for obvious reasons. I think the really worrying one as a country is that childcare and domestic violence are actually increasing and getting busier. The flip saying of the moment seems to be that at the end of this lockdown, we'll either be having lots of babies or lots of divorces.
Yeah.
You've got to be pretty lucky and pretty well positioned in the private client area. Family generally it's a bit slower at the moment because there aren't the
it's coming back though, isn't it? Family will come back.
It will come back. Again, one of the things, again, I'm sort of leaping ahead of myself a little bit, but one of the things that you have to do when you're looking at cash flow and you're looking at cash forecasting, you need to look at both inflows and outflows. And if I just talk about the inflows for a moment, you need to look at each department. The way that I'm approaching these things is to start, first of all, with what the business looked like before the COVID came along. So again, many firms, particularly those with March and April year ends, had got a draft budget for the coming year, what they were expecting. And that's a good starting point. So they would have an estimate of the billing by department for the coming year. If you then look at each department separately, month by month, and apply the percentage to that of what do you expect. So taking residential conveyancing, April, May, June, we've probably been looking across the board at no more than 20% of normal. June, July, August, we hope that it picks up and gets a bit more. By the autumn, we'd be expecting transaction values or numbers to be 60, 70, 80%. Not many people at the moment are expecting the property market to come back to 100% by this time next year. So you would have a sort of a wavy graph. If you try and do the same exercise in private client, you'd have a completely different set of numbers. They're probably at 110% at the moment, and you can expect that to continue probably for most of the time. As you mentioned, family, you might have a short-term dip and then it come back again. So I would be forecasting department by department, seeing what that looks like in terms of billing. I think one of the other things that will be inevitable that you would need to factor in is that there will be some areas where clients will be slower to pay. It's as hard as anybody works, I think, particularly in the commercial areas. Your commercial clients are going to be holding on to all of their money for all the same reasons that we're talking about now. So that will be a matter of negotiation, and I know that my friend Nigel Haddon, who's the pricing guru, is actually encouraging people to offer small discounts for a quicker settlement. So forecasting going forward is more difficult than it's ever been, but I think it's something that you have to do to get some kind of a fix. As an aside, if we take a typical firms that I tend to deal with tend to be in the £5 to £8 million region, quite a few of them. We're looking there at a fall off in turnover in most cases of around a couple of million. Certainly more than 1 million, and some of them it's more than 2 million. That's a huge hit.
Yeah, of course.
And it's impossible at the moment to avoid that hit because it's happening now.
And so we've just had another question in, which is sort of related, I suppose, around taking monies on account. And yes, do you think it's going to be more difficult to convince people to put monies on account?
It depends on how you ask them, doesn't it? It depends on how you explain it. There will be less people who are comfortable with that, but point about cash flow is it's about self-protection. So I would always encourage it, depending on how well you know the client.
Yeah,
I would always be looking for monies on account. Yes.
Yeah. Okay. Should we move on to the actual looking at a
the
actual format of,
Okay. This is about as simple as I could make it, and I promise you this is the only set of numbers that you're going to see, because I appreciate most of the people looking at this will be lawyers. But the format of a cash flow forecast is the same, irrespective of the time period that it's covering. We could have many more periods going off to the right. There may be far more detail coming in that's hidden in a true cash forecast. But starting point is, first of all, you've got to know where you're starting from. So we've got to know what our opening balance is today. The right-hand column, it can be the same. It can be a day, a week, a month, or a year. How often would you come and do this exercise? The answer is as often as you need to. If you've got plenty of cash and your projections are showing a reasonable answer, then I wouldn't do it more than once a month. If you're in really up against the wall, I would be doing this exercise every day. And I think I said to you yesterday, one of my better exercises was actually keeping quite a large firm afloat for 4 years till we sold it, using this sort of methodology. So first of all, start with the opening balance. Next thing, what is the cash that we expect to get in? As I've just said, looking out 12 months, that's very speculative. If we're looking at a short period and the next day, week or month, we should be getting an indication of that, both from our normal history and from talking to our partners of what their expectations are, particularly if you're in kind of firm where you've got you're dependent on very big individual transactions. The one I was just talking about from time to time would have transactions of several £100,000 at a time, and so we'd be watching those like a hawk. So look at what's your estimate of cash in.
Can I just ask a question on the cash in point? I know I asked you this yesterday. Just in terms of kind of management as well, not man management, people management, I suppose, and whether something to look out for, I suppose, in terms of the cash in figure is, people. I'm not suggesting people will lie, but for some firms, I expect that the situation will be looking quite negative for typical kind of high street firm or multidisciplinary firm. There will be some areas where partners and heads of departments will be thinking, well, redundancies are probably going to be coming, and people will want to protect their teams, won't they? They'll want to protect their own little kingdom. Do you have any kind of practical tips for making sure that the cash in figures are not realistic, but I suppose you would probably want them on the cautious side, wouldn't you? You don't want to be going in and thinking, we're going to get 200k if actually you're going to get 175, because that's a massive difference.
Yeah, you've got to, firstly, you've got to start getting people to behave as adults. As I said earlier on, we can cope with anything except surprises. You will need to do these exercises repeatedly over the next 12 months. How often depends on your situation. You will need to look at what your previous forecast said, and if it doesn't come up as forecast, you need to ask the people why. And if it's apparent that people are playing silly games, as you described, then you've just got to have a serious crashing together of heads.
Yeah.
Because it is about survival. It's a bit like going to the doctor and not telling him your symptoms because you don't want him to tell you bad news.
Yeah.
The doctor can cure you if they know what the symptoms are.
Yeah.
In most cases, even if the answer at the end is not a palatable one, there will be a solution, and you at the very least need your partners to be grown up. So, sorry. Okay. Cash out. Okay, so a cash flow forecast is the difference between, or cash flow is the difference between what comes in and what goes out. The thing about cash out is that's where I would always start on my forecasts, because it is so predictable. You can, in most cases, in a law firm, get this down to a fine art and be pretty accurate pretty quickly. First thing is look at standing orders and direct debits. They are going to be, in most cases, direct debits vary a little bit. If they're essentially going to be a fixed amount on a fixed date, and they are going to happen, and that money is going to leave your bank account unless you actually take some action to change it. So if it's direct debit for a loan, you don't look like you've got the money, you can talk to the lender about repayment holiday or something. But unless you actually act on those standing orders and direct debits, that's going to go. The next big thing particularly in a law firm, but in most cases as well, is there are then some payments which are normally very substantial payments for which the date is fixed well in advance. The amount might not be exactly, but you will have a pretty good idea of it. So the obvious ones for that are your payroll. Related to your payroll, your payments of PAYE and national insurance. They're always on the same date each month, and they're always roughly the same amount, unless you put any schemes in place. VAT comes under that. Again, you always know the date it's going to happen. You might not know the exact amount, but again, it's predictable based on your turnover, and other tax payments. You'll then have well, those two things, standing orders, direct debits, and those big payments will normally take care of the biggest part of your outgoings. You can then look historically at what you have spent on a regular basis on other outgoings, things which normally go through the profit and loss account. You need to look obviously at drawings there, but forecasting cash out is not usually that difficult. Once you've forecasted it, and if your answer is not a good one, then there's only three things that you can do to affect the cash out. First thing, well, I suppose the thing that you would ideally wish to do is to cut the expenditure once and for all. That is very, very, very difficult in law firms. To make real inroads of permanent change in less than a few months is difficult. Most of your expenditure is actually fixed. If you think, again, we'll talk about staff a bit more in a moment, but essentially your staff are your staff. Your premises costs are not going to vary very much. Your IT costs are not going to vary very much. Just try playing games with them. The other biggest cost is professional indemnity insurance, which again is fixed for a year. So there's often not a lot of ability to actually cut them. What you could do, you can make temporary cuts, or you can defer things.
Okay.
Now, cash flow is about deferral.
Yeah.
So which is what the government has done with the VAT, which we can ask the landlord if we can pay the rent later. We can ask the landlord if we can pay the rent monthly rather than quarterly. And with the staff things, we're looking at the moment, obviously looking at the furlough, which is having a big effect. Many firms are actually looking at temporary salary reductions. We can't afford the full payment at the moment, but we can afford 80% for a short time. The staff are not going to stand it forever.
No.
But essentially, you can defer, you can have temporary cuts, or you can have permanent cuts. And obviously, permanent cuts, the biggest thing is that's going to mean redundancies, as you mentioned earlier on.
Mm. But you're still going to need cash, aren't you, for redundancies, depending on the levels at which you are making people redundant. It's not a cheap option, is it?
Well, it's not a cheap option. No, you've got the one-off cost, but you actually then have to come back to say what can we actually afford relative to our income.
Yeah.
And again, just as a rule of thumb, and we're going to be doing a survey next week through my friends at Mosaic, but the impact of these lockdowns is going to be three things that can be measurable. What do we think the loss of turnover is going to be? How much can we offset that with staff cost savings? The rest, there will only be fairly modest savings. So what's the net impact going to be? And for many firms, I'm seeing the impact is likely to be over £100,000 per partner. And it's going to happen. That's going to happen in a 3-month period, that hit. The cash flow impact may be spread out longer. Yeah. And that's pretty frightening for many firms. So there will be redundancies. I suspect what's going to happen is there has been a divide between the stronger firms and the weaker firms that's been widening for some years. I think the stronger firms may have some redundancies, but they'll also end up taking the opportunity of some acquisitions.
Yeah.
What I see more likely happening is some smaller firms having to lose their independence. Hopefully not go completely bust, but hopefully there will be enough people around to rescue them. Although that's not a given. Okay.
Should we? I'm just conscious of time. Should we move on to move on to inflows? Because I think this is quite an interesting one, isn't it, for people?
Yeah, we were talking earlier on about how to predict the likely turnover.
Yeah.
Again, as you were saying, I think there is the management issue. One of the things that I would say, again, prioritizing cash flow over theoretical profit. I would actually not be putting people on furlough who are sitting on a pile of work in progress or debtors that they should be billing and collecting. You know, you've got a typical mid-ranking lawyer on you know, £40,000 or so, you're going to save £4,000 in a month. If that person is sitting on £100,000 of work in progress, then they can get £4,000 out of that quite easily.
Yeah.
And so actually start focusing much more on anything which is outstanding. And it's probably not something you can do in the short term, but it would certainly make any incentive schemes that you have contingent on performance in terms of collection, not just in terms of creation, whether that's hours or billing. And I would certainly be looking at anything which can be done. So when I'm talking about negotiating, if there are significant bills outstanding and there are queries or objections, you just have to resolve them.
Yeah. So pick up the phone, speak to people, presumably, you know, get what you can get in as quickly as you can.
Absolutely.
Yeah.
Absolutely. So if we just go back to the the document with the numbers on, please.
Yeah. Can I just ask you one question quickly?
Yeah.
When you're looking at sort of predicting your cash in, again, it's that question in terms of inflows, you know, is it important to be quite cautious, to be quite pessimistic?
No, it's important to be as realistic as you can. What you want, depending on the size of the firm, but if you're bringing this together through several partners, you need them to be as realistic as possible. You don't want to be too cautious, because you might then take a rash decision to, you know, make redundancies that prove not to be needed. Okay. You don't want people to be unrealistically optimistic.
So it's a real balance, isn't it? I mean, and presumably as well, when you're looking at this, you know, this should be a collective effort. It shouldn't be just
yes. Yeah.
Sticking the figures in. It needs to be sort of reviewed by.
And you need to come back to it and say, how did we get on?
Yeah.
You know, why didn't that bill come in? You told me that case had settled. You told me that client is ready to pay when they've got such and such has happened. Okay, I just want to go back a couple of things. Okay, so the format is opening balance plus the cash in, less the cash out. And that's your closing balance tonight, the end of next week, next month, whatever. The really important thing is not what your closing balance is. If you've got an overdraft of £150,000, as in that example, and you've got overdraft facilities of £1 million, you don't have a problem. Yeah. If you've got a closing balance of £150,000 and your overdraft limit's 100, you've got a real problem. So the real issue is what we call the headroom, which is the difference between your forecast level and the facilities that you've got available. Now, if your headroom is getting very tight, then you need both to step up your forecasting and you need to step up your efforts at the cash collection, and you need to work on all fronts. You then need to engage in whatever measures you can to save money, back to what I said before, defer, cut permanently or cut temporarily. But if you have actually got a track record of producing realistic cash flow forecasts, and it shows that you will come out of that decline, that it's a pinch point rather than all going in one direction, then you can actually engage in discussions with the lenders about providing you with more facilities, which will give you the headroom that you will then able to continue trading, and you won't be going into a death spiral. So obviously the first thing that you would do, and again, one of the reasons it's important actually to do these forecasts regularly is if you've got a track record, then you can show your lenders that your forecasts are realistic and they are coming true. They've got more confidence in being able to lend to you to get out of the hole. You certainly need then to have the discussion with your primary lenders, with your main banks. I don't think it'll come as a great surprise to them at the moment that a lot of people are going to have short-term difficulties. So it won't be unexpected. Also, there are still a lot of secondary lenders out in the market who are willing to lend to law firms that they think have a reasonable future. So if this is a temporary situation and you see your firm returning to health next year and beyond, the likelihood is that you will be able to find facilities. I'll go back to where we were before.
Okey-doke.
That's what the whole government. Yeah, we've probably just moved on to the next one. Yeah.
Yeah.
The whole point about the CBILS scheme and the cash flow schemes that the government have put in is to allow people actually to navigate these difficult times. That they're not going to take away the hit. They are going to give you the opportunity to spread it over several years, up to 6 years. They're leaning very heavily on the banks to make facilities available. We've had a couple of situations we've seen where the banks have said on the strict application of the CBILS scheme, we can only lend you half, for example, of what you've asked for. However, we actually view you as a good commercial risk, and we're actually willing to lend you more of the money on normal commercial terms. So CBILS is not the be all and end all, engendering the confidence in your primary lender that you actually do know what you're doing and that you are going to be able to get out of it, and you have got the resources for the longer term is important. And if you're talking bankers' language is cash flow. So we're right back to...
It's almost circular, isn't it?
Yeah.
Cash flows.
Yeah. So as I said, you may get more facilities out of your existing lender. You may be able to, as I say, if something is a pinch point, and again, just the largest one which I did, which I mentioned earlier on, quite amazingly, it was quite sort of substantial London office premises, but they were able to get the landlord on several occasions to spread the rent over 3 months, and London office, big numbers. That was quite a difference, which allowed them to negotiate it.
I mean, it strikes me that a lot of this, whilst it's cold hard numbers, again, a lot of it comes down to, I assume, to those human relationships. So
sure.
It is speaking to people, it's speaking to your internal team, isn't it, to get them to get the money in. It's speaking to the clients to say, look, we need to get the money in, can you pay us, please? It's speaking to the bank and having that relationship and sort of saying, these are the figures, but, we trust each other because, we have this working relationship. And, like you say, speaking to your landlord, speaking to whoever else, you may be able to negotiate. It's a very, it's a very kind of human situation, isn't it? It's not just these cold hard numbers. It's a lot of it's communications and relationships.
Oh, absolutely, absolutely. Legal services are a people business.
Yeah. Okay. Shall we? So we've got 3 questions, which I'll probably wait until the end to deal with those. But I just want to turn to next steps. So what should the people who are here today, you know, what do they need to do? Kind of.
Well, first thing to do is to make sure that they are actually they've got a process of cash forecasting. It staggers me how few law firms, as part of their monthly management reporting, actually have anything that looks forward. So the first thing I would do is to start forecasting and to keep practicing it, because the forecasts will get better. I think the thing, and you said it before, you've actually got to front up with your own people. You know, they are adults, they're not idiots. You know, lawyers are generally pretty intelligent people. They can see the way the world is going. You need to be able to communicate to them. Ideally, what you would be saying, if it's what the numbers say, is, yes, we've got a problem. We think it's a temporary problem. We actually need you to help, and we need you to change your priorities so that instead of focusing on the internal things like the chargeable hours and so forth, that we focus on generating cash and on saving money wherever we can. So it's talk to your own people, it's communicating with them. It's actually also trumpeting the successes.
Yeah.
So that's where I would be saying, and I say, talk to your bank. They will not appreciate surprises.
Yeah, nobody likes a nasty surprise, do they?
No. If you're surprising them, they think you're not in control.
Right, okay.
If you're in control,
you know what's coming, don't you?
Yeah, okay. We may be going close to the edge, but we think we've got ways of steering it back. I don't expect them to quiz you about your assumptions, but you've got to talk to them.
Yeah. Okay.
And just as an aside, it's not a good time to be looking to change banks.
No. No, I imagine it's not.
So you've got to try and stay friends with them. Yeah. Well, in other circumstances, if your bank wasn't giving you the service and wasn't giving you the facilities you felt you needed, you'd be quite justified in saying we'll take our business elsewhere. But the banks have got so much on at the moment dealing with their existing customers. They're really not in growth mode. You'd have to be something pretty exceptional for them to say, yes, okay, that's going to help me hit my target, and yes, I want you. So keep them on side.
Okay.
Questions?
Do you have any key actions, or have we've kind of covered
those are the key actions.
They were the key actions.
So, talk to your own people, talk to your bank.
Okay. Big thanks, Barry, for sort of agreeing to do this with us. It's been really insightful, and I hope all the attendees have found it so.
Hope so.
Yeah, fingers crossed. Just to close, this webinar will be available to watch again. We'll be putting it on our YouTube channel, and we'll also have it on the website. And if anybody missed the previous webinar, which was on CBILS, the coronavirus business interruption loan scheme session we did with Sarah Hutton, that is now available on our YouTube channel and on our website. We have some more webinars sort of coming up in the future. Our next one is probably going to be looking at sort of recoverability and sort of getting the cash in. So again, should flow quite nicely from sort of Barry's advice today. If anybody has got anything that they would particularly like to see covered, then please do let me know. I'm just checking. I think we might have a couple more questions.
Okay, go for it.
Oh no, just some thanks. Well, thank you for the thanks. That's very kind. Okay. What was I going to say? Yeah, I think that's it. If anybody wants to obviously get in touch with us, Barry, I think you have said that you may be willing to sort of offer a little bit of advice.
Happy to have a chat with anybody for half an hour if need be.
Well, that's really generous. Thank you.
The details are on the screen in front of you.
Perfect. Have you got anything else to add, Barry, before we sign off?
other than to thank you, and also to thank you for letting us also put the recording of this up on our website, which will be done. My colleague Michelle will deal with that shortly. As Victoria's discovered, Michelle actually is the one who makes our business work.
Michelle's the boss.
Absolutely, I just do as I'm told. And if she sees this recording, she'll be astonished. Okay.
Right, well, I think we'll all head off. But yeah, thanks again, everybody, for coming. And yeah, two things. If there is anything you want to tell us, you want us to cover again, then also you want us to cover, you know, in general, let me know. And also next week, look out for our survey as well, which will culminate in a white paper that we're putting together with Manchester Law Society.